Hi, everyone. I'm David Glazer, and I'm here with my colleagues, Katie Ilton
Hello.
and Steve Beck.
Hello.
And for those of you who are thinking, who is this Katie Ilton person? That Katie used to be known as Burkhart, but she got married last June. So we're here to talk today about imaging. Just a couple of small announcements before we dive in. The next webinar, which will be on October 10th, 10/10, same time as this, is going to be about immigration. And so Deborah Schneider, one of our immigration colleagues, will be talking about how hospitals and clinics can hire foreign physicians, basically what you need to know about the immigration laws. So today we're going to do an imaging roundup. It's what you need to know about imaging. This may be the most complicated thing we deal with. I would put it as the topic that most humbles me. I often feel like I need to look stuff up in this area. I think all three of us are worried that we're going to be more confusing than clear today. Our goal is to try to focus on some of the practical. We're going to talk about substantive rules in here and include them, but we'll try to boil those down to, the basics of what you need to know, like what is supervision in operational terms. But this stuff is really hard. And it changes a lot. And I think Steve Beck put it well when talking to me this morning. He said, one of our goals should be to tell people, if you've got an imaging deal, you need to periodically revisit and make sure that it's okay, because the rules change a lot. So we're going to talk specifically, start off talking a bit about the office and the clinic, and then the hospital. Then we'll move to independent diagnostic testing facilities. And then Steve and I are going to end it by talking about joint ventures. It's hard to come up with an overarching organization to this in some ways, because a lot of the rules touch on multiple things. Supervision applies in the clinic. There are different rules for the hospital. There are different rules for the IDTF, but we'll try to walk you through all of those. So Katie, formerly Burkhart, now Ilton, will start us off.
All right. So we're in the office setting now, so focus on that for the first part of this. First things first, in order to get paid for imaging in the office, you need to have an order. And it's clear from Medicare that that order must be made by the treating physician. Medicare says that a scan that's done that isn't ordered by the treating physician in the office is not medically necessary. So this is a condition of payment. The treating physician includes treating practitioners who are acting within their scope of practice, so NPs, PAs, etc. But that's the general rule, with this very narrow exception for an interpreting physician who's basically ordering more scans based on a diagnostic mammogram.
And I'm going to interject just one point that makes this is an example of things that make it confusing. For some of these rules, physicians include extenders, and sometimes they don't. And that's just really designed to confuse us, but this is a place where it does.
And that's a perfect segue to the next condition of payment that you have to be concerned about, which is supervision. Now, I'll mention this at the end of this little bit, but this must be done by the physician. In the hospital setting, you have these things called therapeutic services that can be supervised by non-physician practitioners, but be clear that diagnostic tests, including imaging, has to be supervised by physician in both the office and the hospital. So, what are the levels of supervision? There are three. We'll go through sort of the definitions of each. They could change from year to year. I don't think there's a lot of change, but the way to figure out what kind of supervision a scan needs is to look at the fee schedule for that particular calendar year. There's actually a pretty useful chart, and that will tell you the code for the level. And that's important because that, again, is a condition of payment.
But generally speaking, plain film is general. MRI only involves direct if it has contrast. And then where things and most stuff imaging is general, and the exceptions are in the cardiac world and a few other things. You'll get an occasional test that requires personal or direct.
So personal supervision is probably the easiest to define, and unfortunately it's not used the most in terms of ease of knowing what to do. But that means that the physician who's supervising, again, has to be a physician, has to be in the room during the scan. Direct supervision is sort of the medium or middle level of supervision, and this is, I think, the tricky one to figure out. Basically, direct supervision means we know that you don't have to be present, the physician doesn't have to be present in the room. but there are these two criteria. They have to be present in the office suite, and there's also a temporal criteria. You have to be immediately available to jump in and help out if it's necessary. So what in the world does in the office suite mean? Well, it's a good question, and CMS hasn't given us a very good definition. They have said that in being in a different building than where the scan is performed is not in the office suite, and that's sort of logical in that you usually don't have suites of offices spanning two buildings. It's not necessarily practical, but it's logical from the plain language of office suite. We have some proposed rule language that CMS, it's been about 15 years ago, has given us that gives us some clues here. They've said the office suite is basically, in most cases, a group of contiguous rooms. Now, there isn't really a limit on how many rooms can be in this line, but we do know that you have to be immediately available. So if the contiguous rooms that you call your office suite span multiple floors, it's going to be hard to say that you're immediately available if you have to go down 10 flights of stairs and all the way across the building. When asked whether it's possible to supervise on a different floor, CMS backed off a little bit and said that this is basically a question for the local carrier. So that's a little bit even more confusing because you have different carriers interpreting it in different ways. But CMS did say it's reasonable, I think, or at least conceivable for the carrier to decide that in certain circumstances it's appropriate to have the scan happening in one room on one floor and then for the physician to be on a different floor. In the situation where a physician might practice on a townhouse. Now that might be a solo practitioner situation. It doesn't help in these big buildings. So where do we come down? Well, basically, we'll go back here to our 30-second test, which is a decent way to judge whether you are immediately available. Now, note that if you're in different buildings, 30-second test isn't going to be super helpful because we know CMS doesn't like different buildings. But if you're in the same building and you can get there in 30 seconds or less, I think you have a pretty good argument that you're immediately available for direct supervision. General supervision is a little bit easier to deal with. There's no location requirement. You don't have to be physically present in any particular place. So you could be on the golf course. You could be available by phone somewhere. What we do know is that the supervising physician is going to be responsible for the techs who are doing the procedure and who are doing the scan and the equipment. So that helps us figure out a little bit what we need to do to meet the general supervision test. It's going to be hard for us as your lawyers to argue that you meet the general supervision test if a regulator walks into your imaging center and says, "Who's supervising?" And the techs say, "We don't know. We don't know who we're supposed to call if we have a problem." So it would be good for the techs to know who is the supervising physician at that time so that it shows that the supervising physician will be responsible if something comes up. This can get a little hairy when you have multiple groups because if you have multiple groups using a scan, you have multiple groups supervising, maybe the same techs doing the scans. So it's really important in those situations that you make sure everybody knows who's on call, in a sense, at the time the scans are being performed. And David mentioned this, and so did I. Only physicians can supervise tests. It doesn't include these physician extenders. They can play a role in ordering the tests if they're the treating practitioners, but supervision is strictly for diagnostic tests left to physicians. I'll touch on this accreditation requirement because it's not brand new, but it is as of this year. And we heard a lot about it in the years coming up to it, but now that it's in place, there are some interesting questions it's raised. So the rule, according to the Medicare regulation, is that as of January 1st of this year, Medicare payment could only go for certain imaging services for the technical component to a supplier who is accredited. Now, those imaging services I've listed here doesn't include X-ray, for example, but payment could only be made to a supplier who's accredited. Now, I'll point out that the statute was a little bit different. The Medicare statute says only payment can be made when when the supplier that furnishes the scan is accredited. And that's a little different. It raises a few questions for me. The first, being the last bullet point here, is what does this mean for purchase test? Under the statute, I would argue that if you have purchased a test and the supplier that you purchased it from was accredited, then you've met the requirement for accreditation and for payment. But under the rule, it's a little less clear because it says that payment can only be made to a supplier that's accredited. And I've heard rumblings, at least from reading CMS commentary and calls and such, that CMS considers that whoever submits the claim, whether you've purchased the test or not, is going to be required to be accredited. And this isn't entirely clear how it's played out to me, but I think you certainly have an argument that for purchase tests, the furnishing supplier from whom you purchase is accredited, that you've met the requirements. There have been a few other questions about what happens if you add a new scanner, maybe you add a new location where you do imaging. Unfortunately, the Medicare rules about accreditation aren't very comprehensive. They basically say you have to have accreditation and that the accrediting organizations basically are in charge of doing this. So what we've advised clients to do is contact their accrediting organization if they add a new machine, because there may be a requirement on that end that the accrediting organization come out and get phantom images, etc. The same goes for adding a new location. CMS has indicated in calls to industry that you would need to have some sort of process for when you add a new location. And so again, we've advised people to go to their accrediting organizations. But takeaway is here, now that we have accreditation implemented, there may be some rules or some questions coming up as a result. All right, I'm going to hand it over to David.
Okay, so Stark could be a freestanding webinar, but we're going to do it in 3 minutes. So first, Stark applies to all imaging. So basically, if you're doing imaging, Stark applies. In addition, many, perhaps even most, but certainly many states have laws that get to imaging that either mimic Stark or do other things. So pay attention to state law. We've got too many states represented here to touch it. So if you're doing imaging, you have to meet a Stark exception. So if the doctor either owns or has any compensation relationship with whoever's providing the image, and the doctor is ordering the plan of care, that's what triggers Stark. So the trigger is, some people use the term referral. Referral is misleading. The actual trigger is creating a plan of care. So if the doctor says you need an MRI, it doesn't matter if the doctor says you need an MRI from this location. The referral is the act of stating you need an MRI. That plan of care is, for purposes of Stark, the referral. So that's probably the most important thing. You can't sneak out of it by not mentioning the name of the place where the person might get the scan. So Stark's exceptions break into two categories: ownership and compensation. If the doctor owns the ancillary, the one you're most likely to use is the in-office ancillary exception. It has a bunch of conditions, and I think we have a past webinar on Stark we can send you if you feel like you want help on Stark. If you're rural, which is defined as outside of a metropolitan statistical area, and having 75% of the patients living outside of a metropolitan statistical area, and generally speaking, that means counties with 50,000 people or fewer, you can own things. And then there's the whole hospital exception, which is a mess, and I think Steve's going to talk about that. But then there are compensation exceptions that protect leases, employment, and fair market value. So that's Stark in a nutshell. Now, as of last year, 2 years ago, so as part of Obamacare, there was an imaging or a requirement that if you're relying on the in-office ancillary exception, you have to give notice of any advanced imaging of certain information. And so here are a couple of key points. First, if you are a nonprofit organization and you're rural, or you're rural, sorry, either or. If you're a nonprofit or you're rural, you may be able to blow this requirement off, but, and this is a huge but, because most people think they can just blow it off, if you want to be able to compensate your physicians for work that is incident to their work, the only way you can do that under Stark is under the in-office ancillary exception. And so if you have a production-based compensation formula and that formula credits physicians for work they supervise, you still need to give the notice I'm about to talk about. Otherwise, if you're nonprofit and rural, you don't. If you're a for-profit physician clinic, then, and you're urban, you do. So what do you need to do? You need to give notice. You have to give it in writing it can be an email, for all MR, CT, and PET patients. It has to happen at the time you refer them, so not when they show up for the scan, but when they get the order. It has to tell the patient that they can go somewhere else, and it has to give an address for at least 5 suppliers that are within 25 miles, or if there are fewer than 5, you have to list them all. You can say anything else you want, so there's no limit on what else you say. You can say, for example, you better check with your insurance company to make sure that it's covered, so you can say more, you just can't say less. Things you don't have to do that there was some talk of, you don't have to get the patient to sign it. You don't have to, there was in the proposed rules talk about giving patients information that was around where they live. You don't have to do that. You don't have to list more than 5. You don't have to give directions or anything like that. You just have to say, here are the providers. Last thing I'm going to do talking about Stark is say that people get confused about how you can split the revenue from imaging. Basically, physicians can get credit for any designated health service that they personally perform or for work that's incident to their work. Imaging can't be done incident to. So you can't give a doctor credit for the MRs that they order. Actually, should back up a step. If state law allows it, you probably could give them credit for the non-Medicare and Medicaid scans they order. I don't recommend it because it's too easy to screw up. But for Medicare and Medicaid, and then in many states, you can't get credit for the scans you order. But the money that comes in can be divided based on the doctor's RVUs. So you could do it on production for work that excludes the imaging. You can divide it equally. You can divide it on some prefixed amount. You can take subgroups of your physician that constitutes at least 5 physicians and divide it amongst them equally or based on RVUs. So let's say you want to let's say you've got a bunch of GIs who are involved in imaging and they don't want to share any ortho income and vice versa. You can subdivide. And finally, if less than 5% of your revenue comes from designated health services, you might be, which means if less than 5% of your revenue comes from Medicare and Medicaid designated health services, you might be able to blow Stark off altogether. And you need to know state law. Now, I'm going to turn this over to Steve, who's going to talk about one of the more confusing laws out there, the anti-markup rule.
Thanks, David. I think that that last little set of riffs was a nice introduction to the anti-markup rule because it was one that I think gets everybody's head spinning, and it's very hard to follow all these rules with multiple twists, turns, and exceptions. And the anti-markup rule is one of the things that makes the imaging area more complicated than any other area because it's kind of expanded to be its own little Stark-like rule. So I've got a lot of slides in here, and we're going to go through some of them quickly. I want them to be in there so that you can go back and refer to them, and I want to try to concentrate on the basics, hopefully giving you some takeaways. And the big takeaway, as David said before, is if you've got an arrangement that seems to implicate the anti-markup rule, you probably have to give it a pretty comprehensive looking over. So, Medicare created this anti-markup rule for purchase diagnostic tests a long time ago. It's a statutory section. It applies to diagnostic tests, not to therapy. It also doesn't apply to clinical laboratory tests. It's only a Medicare rule. They created a proposed rule which was dramatically broader than the statute permitted. This was back in the last decade. The final rule that came out was much superior, but it also continues to have some complication in it. So this statement of the rule packs almost all the information in it that you need to know. Number one, the anti-markup rule applies when a physician or other supplier bills for the technical component or professional component of the diagnostic test that was ordered by the physician or other supplier. Okay, so 2 things. Number one, this is not for facility tests. This is for physician or supplier tests, and it's for self-ordered tests. So if somebody else is sending you the test, anti-markup rule doesn't apply. You don't have to go through all the other stuff. Okay. Now, bottom of this section, the diagnostic test is performed by a physician who does not share a practice with the billing physician or other supplier. If that's the case, then the anti-markup rule applies. There are a couple of ways that you can say you share a practice. And I'm going to skip through a couple and get to the first way that you can say that you share a practice. You can share a practice if you are a 75% physician. That means that at least 75% of your professional services are billed through the biller or through the billing physician or other supplier. You determine that by either looking back or looking forward. But basically, this is your core physicians. If you have self-referred technical component or professional component of radiology services, then the people who are 75% billers in your clinic share a practice. If you have an outside physician, somebody that doesn't bill 75% of their services through the clinic, then you've got to use another test to say that you share a practice, and that's the geography test. You're deemed to share a practice with the billing physician if you are in the same building. And oddly enough, in the same building means using the test that's used for Stark. Now, Stark is generally a completely separate set of rules, but they said, well, let's just adopt this odd test to determine whether you're in the same building. And that means you are in the same building where the ordering physician regularly furnishes patient care, including the full spectrum of patient care. Either one of those tests is met, the anti-markup rule doesn't apply. Now, I'm going to move to this set of slides. Does this apply to reads? The law does not apply to reads. It's absurd to think that this applies to reads. It has nothing to do with what the statute said. The government, however, takes the position that it clearly does apply to reads. Why? Because the regulators thought that might be a good idea. They don't have the authority to create a new, significant, sweeping law just because they think it is a good idea, and that's what about 4 of these slides say. But that doesn't mean you should assume that this rule does not apply to reads. It means that you should be aware that the government thinks that it does apply. The government has established a regulation where they very clearly say it does apply, and you've got to figure out what to do with the reads if you're obtaining reads from someone who's outside your clinic. I think the takeaway is look over any situation where you're providing radiology services and billing for radiology services and say whether they're professional or technical, and say to yourself, do I think the anti-markup statute might apply? And if so, get somebody to help you. You might have to stand on your head to try to figure it out, but try to figure out whether you've got any exposure under this law. Katie? David? Which one?
Katie. All right, thanks, Steve. So assuming you have not quit because you're tired of all of the rules and you get to the part where you have to submit claims, this year was a new set of place of service codes, a guidance in the Medicare manuals that was issued, I believe, around February and took effect in April. So these place of service rules actually apply to all the services that are paid under the Medicare fee schedule. Since we're talking about imaging, we're going to focus on this situation of when you have a read done remotely, not in the place where the patient received the scan. So under the old rule, you were supposed to use the place of service code that said that represented where the physician was physically located when they were providing the interpretation. Now, that brought up a few questions about, well, what's the interpretation? Is it the actual looking at the images? Is it the report, etc.? Well, that's gone now. And as of April 1 of this year, you are supposed to be using the place of service code that corresponds to where the patient actually received the technical component. So it's actually a lot easier now, which is great. Unfortunately, it didn't really fix some of the problems that we've had with this issue of offsite reads. It remains the case, the place of service codes didn't change this, that the physician who's interpreting has to enter the zip code of where they were doing the read, and that determines the payment locality of of the interpretation. So this doesn't help the people that are having to enroll in various jurisdictions because they have people performing offsite reads outside of their carrier jurisdiction. So just to be clear, that's still the case. And also, we still have the situation where you can only bill globally if you have a physician doing both a physician or somebody from their supplier group doing both the technical and the professional component. So just because you might have the place of service code used for both, the same place of service code for both the technical and professional, doesn't necessarily mean that you've hurdled the global billing rule. Okay, so that was the clinic side of things. And we are going to jump into the hospital side of things. So we're going to talk about orders first, like we did with the clinic. Luckily, orders in the hospital are actually a little easier once you figure out why it's easier. So if you looked at the treating physician rule that said all diagnostic tests have to be ordered by the treating physician, it appears to apply to every diagnostic test. But actually, over the past 15 years or so, CMS has made various iterations explaining that, in fact, in the institutional setting, in the hospital, it doesn't necessarily have to be the treating physician who orders the diagnostic test. I think that goes back to the Halloween 1997 rule, which David often refers to in these webinars, which had a lot of good stuff. In the end, we learned that, and this was made clear through the regulation and through manual guidance, that you only have to have the treating physician ordering the image or ordering the diagnostic test if it's a diagnostic lab test furnished in the hospital. So for imaging, the only rule that's really out there about who can order is the condition of participation that says for radiological imaging, any practitioner with clinical privileges can make that order. Obviously, you have to be acting within your scope of practice, state law, and hospital policy. Supervision in the hospital for diagnostic tests is actually relatively simple as well. Again, only physicians can supervise diagnostic tests. This is confusing the hospital because you have non-physician practitioners who can supervise therapeutic services. Don't get confused here. The same rule is the same rule as in the office. So, in general, you're going to use the supervision levels that are in the fee schedule for diagnostic tests in the hospital. The only little tweak here is that when you're talking about directly supervised tests, and you have to be immediately available for those, there's no in the office suite language. You could be somewhere on the campus so long as you're immediately available. And then carving out from that this very narrow situation where if you have under arrangement deals and an off-site department of the hospital, in those cases, the supervising physician has to be present in the office suite. So it's a little confusing, this exception and then the carve out to the exception, but generally the case is that direct supervision, you don't have this geographic boundary.
All right, this is Steve again. I want to talk a little bit about one trap for the unwary that the PPACA law inserted into Stark, and it has to do with ownership of the hospital. Now, lots of people have relationships in which there is co-ownership of some joint venture which provides imaging services. And there's a couple of ways that that can happen. Number one, it could be in a rural area, and they could be using the rural exception. Number two, and this is more rare, it could be part of their overall ownership interest in a hospital, and they could be using the whole hospital exception in Stark. So the hospital ownership problem has to do with the fact that PPACA said, we don't like physician ownership of hospitals anymore, and we're going to prohibit physicians from owning hospitals. We won't fully prohibit it. We're going to create a grandfather system. If you had an ownership arrangement in place by November 2010, and if the hospital complies with a bunch of requirements that make the grandfathering very uncomfortable for them, then you can continue. But most people who are thinking about this problem say, to the extent that it puts the hospital in a grandfather situation, it's intolerable for the hospital because, in effect, the hospital can't grow in size or, in many ways, update its facility while it's relying on the grandfather provisions. So why is this a big problem? Because most people know whether they have ownership of a hospital. Well, the reason is the definition of hospital is very expansive. It includes the hospital entity itself or another entity which provides services on behalf of the hospital and for which the hospital bills the Medicare program. That means that for those folks out there who've created a joint venture with a hospital in a rural area to provide a service like an imaging service, it could be cardiology or radiology, and said, this is a provider-based joint venture, ownership of the separate entity makes for ownership in the hospital. And that means that this exception to the rural ownership exception applies, the exception to the exception applies, and you can't do it unless you're in the grandfather. Now, this is another strange thing about this definition, however. It says we're including entities that provide services on behalf of the hospital and for which the hospital bills, but we're not including entities that are providing those services under arrangements with the hospital. So this is a very interesting distinction. The hospital can say, we have a joint venture, and the joint venture is directly providing services on behalf of the hospital. Or you could say, we have a joint venture, and the joint venture is selling services to the hospital, and when the hospital buys those services for its patients from the joint venture, that's an under arrangement service. One of those is in the direct provision as a provider-based service. One of them is out under arrangements. They look almost exactly the same, and for many kinds of ventures, under arrangements would be okay. So the key issue here is, do we have something that the government is going to view as an under arrangement service? Do we have something that the government is going to view as an entity providing the service on behalf of the hospital for which the hospital bills? Or do we have neither of those things? That's really a factual analysis that needs to be done. If the service requires the hospital to provide a significant portion of the service, either in space or in equipment, in management, in other therapeutic or professional inputs that it provides, there's a decent argument that the outside entity is not furnishing the service on behalf of the hospital, and this section doesn't apply at all. What's happening is the joint venture or physician group is providing or selling something to the hospital. Okay, and not going to trip up this hospital ownership prohibition. But if a significant enough portion of the services being provided, we may be needing to consider further. And then we're going to say, well, how have we treated this in the documents that we did to create the arrangement? Did we do an attestation to the government saying this is a provider-based service? If so, it may be hard to say, oops, it's not. It's an under-arrangement service. Might be possible to change it from provider-based to under-arrangements, but it's going to take some art to make certain that we're doing that correctly and in a way that's defensible and believable. So if you have something that feels like a hospital-based joint venture or a joint venture to provide services to the hospital for which it bills, this is a trap for the unwary.
Okay, and wrapping up hospital pretty quickly with a billing note. The 3-day payment window, actually these slides are not entirely accurate in that now there's an old rule, and as of July 1, there was a new rule. So the old rule, I think probably the batch that you got was a little bit different. But so in the old rule, all diagnostic services that are furnished by a hospital on the date of an admission and during the 3 days immediately preceding that, they're bundled. And then on the non-diagnostic side, they were bundled if there was an exact match in the diagnosis code.
So can you just explain? So the slides that are up right now.
This is the correct state of the rule. On July 1st, 2012, the rule stayed the same for diagnostic services. The bundle would be the inpatient admission and the 3 days prior. So that would include scans. It changed a little bit. It expanded for clinically related non-diagnostic services, in that if you don't have an exact principal diagnosis match, but it's still clinically related, those services are going to be bundled too. So this is a little bit new for non-diagnostic services, but also a refresher for you for diagnostic services, including scans. So basically, be aware of what the hospital and what its wholly owned entities are performing in terms of diagnostic tests, because those will all be bundled. Now, there is a new modifier to put on the claims for any wholly owned entity in order to identify what's going to be bundled.
And it's wholly owned or operated.
Right.
And so
that would include, I'm going to skip the slide because it's talking about the non-diagnostic side. Wholly owned or wholly operated entities would be something that's entirely owned or entirely operated by the hospital. If it's a joint venture where it's partially owned or partially operated by a hospital and another entity, that's not going to be included here. But this is just basically a refresher to remind you to go out there and be aware of what's wholly owned by the hospital, because that will affect what services are going to be bundled.
Okay, so this is David back to talk briefly about IDTFs. Basically, I think my role was to get things that could have been freestanding webinars and do them in 3 minutes. So IDTFs are another one of those. So an IDTF is an entity that was created, as Katie alluded to, in Halloween 1997. It's a thing called an Independent Diagnostic Testing Facility. And Medicare hates them. I mean, it created them. The CMS, it might have even been HCFA then, created them. But it hates them and it wants to kill them off. And so they've been, ever since their creation, throwing more and more burdensome rules on them. I'm not going to go through every element of what you need with an IDTF, but just talk about the highlight of things we've seen get people in trouble. So first thing that gets people in trouble is that you have to have a supervising physician, and that supervising physician can only supervise a maximum of 3 sites. And that supervising physician must be proficient in both the performance and interpretation of the test. And that definition is left to the MACs, the Medicare Administrative Contractors, what used to be called carriers. But they'll often take the position that it has to be a radiologist, for example. They might say only a radiologist can do this, and so you have to know what your MAC's policy is on who can supervise in an IDTF. Next thing you need is, Katie talked about how you need an order from the treating physician to do a test. Well, in an IDTF, that order has to be written. And actually, this is interesting because you can use this in a non-IDTF setting. If you ever have a situation where you don't have a written order and someone is coming after you for your failure to have a written order and they're claiming that you've screwed up, you can point to the fact that when the rules came out, CMS was explicit that they were putting a higher burden on IDTFs because they think they're bastions of fraud. So they expect you to have written orders there. You don't technically need a written order in other settings. I recommend you have one, but if you don't, you are in compliance with Medicare law as long as there is, in fact, an order. Another quirky thing in the IDTF rules, you cannot directly solicit patients. If you're an IDTF, you can put up a billboard, but you can't send a mail or email, "Hi, Katie, we'd like you to try our new scanner at David's IDTF." Not kosher, violates the IDTF rules. There are some little weird things. You got to keep copies of complaints on site. You have to permit CMS to show up. So if some person shows up claiming to be there from CMS, and one of our colleagues, Jim Platt, just had this happen, where some guy showed up and was walking around with, claiming to be from the government, and the place wasn't sure whether to let him around or not. Well, you have to permit unannounced inspections if you're on IDTF, and you have to post your hours of operation. So there are, like I said, a few other requirements. Those are some of the weird ones. And then there's this last thing, which is an IDTF can't share space and equipment with, so you can't share a practice location, you can't lease or sublease its operations, and you can't share diagnostic testing equipment that is used in the initial diagnostic test. So basically, joint ventures, the topic we're going to come to in a minute, don't work nearly as well in an IDTF. Well, let's put it another way. Multiple people might be able to own an IDTF, and IDTF can't share its operations effectively with someone else except a hospital. So Medicare gives you more leeway in sharing things with a hospital. The next slide I put up mostly because I just get so mad reading it. I think my son could have written a better... This is the rule. It's really poorly written. I'll let you read it on your own if you feel so inclined. But here's the most interesting part of this. It says an IDTF can't share a practice location. It can't lease its operations or practice location to another Medicare-enrolled person. Here's what the preamble to the rule says. This doesn't preclude an IDTF from leasing any part of its practice or its equipment used in conducting the initial diagnostic procedure to another Medicare-enrolled individual or group. I think that's exactly what it does. It's like the word not was stuck in. It should say this does preclude. I don't understand. I don't know if CMS knows what they meant to do. But the bottom line is, if you read the rules literally, you can't share. Now, Steve and I are going to bring this home talking about joint ventures. And so Steve's going to talk about it some in kind of the most basic overview rules, and then I'm going to walk us through some very kind of the questions that in the format and the questions that everyone always asks. So Steve, take it away.
So I'm going to talk about one kind of joint venture that we've seen over the years and that I think people need to pay some particular attention to. And this is what some people call the equipment joint venture. The basic idea of this is that it's a contractual joint venture, not an ownership joint venture. Referring physicians own an entity. That entity provides equipment that's used for the procedure that's billed by another entity. So the example is a physician-owned entity owns MRI equipment, provides it to a hospital, leases it to the hospital. Now, there are a myriad of issues that exist that affect this joint venture, and a lot of them have changed over the years. So if someone created this kind of equipment contract or equipment lease joint venture 10 years ago, in the intervening period, they've probably run into a few of these law changes. But this is sort of a synopsis of some of the rules that have an impact on this. Number one, a few years ago, Stark created the stand in the shoes rules. The stand in the shoes rules effectively change which exceptions in Stark apply to a particular issue. So if the physician is standing in the shoes of his entity, then we have a direct compensation arrangement between the physician and the billing entity, and a direct exception is required in Stark. If people were relying on something that was not direct at some point in the past and the stand in the shoes rules apply, they may have a problem. The stand in the shoes rules apply in general if there's a physician organization, that means a clinic, that's owned by the physicians. You must stand in the shoes in that situation. If not, individual exceptions apply. Second, a significant change in Stark happened a few years ago, which was the exception created to the permitted use of per unit of service or per time compensation rules. So if you have a lease where your physician entity provides to a billing entity some equipment and it gets paid on a per click basis, the rule which used to permit per unit of service or per time compensation rules may no longer apply because Stark says we can't pay per unit for a lease of space or equipment to a physician. May be that there's a way to fix that in your entity. It may be that you need to separate the service component from the lease component of your contract, pay one on a flat fee, pay the other on a per unit basis. But in any event, that's a significant issue. Third, fair market value. Even if you have a mechanism for setting compensation that meets the requirement for per unit of service or per time or flat fee, you still need to make certain that the amount is set at fair market value. And fair market value means the amount a buyer and seller would pay each other if they were not in a position to refer to one another. That means you can't use other arrangements between physicians who are buying scanning capacity from each other and say that market value is fair market value, because those people are always in a position to refer to one another. You've got to come up with some other basis to establish fair market value, and it's very useful to look for some outside independent source to get at fair market value if you want to defend this under Stark. Next, we talked about this a little bit before, the definition of an entity furnishing designated health services. If you are providing staff and equipment, your entity may also be something to which you are referring for Stark purposes, and a Stark prohibition may apply, even if you are not billing for the service. Finally, under Stark, this is what we talked about before. If you have an entity that is providing services to someone else and that someone else is a hospital, you need to make certain that Stark doesn't take the position that you actually are the owner of a hospital and have created a big problem for the hospital. Now, if Stark is okay, you still have anti-kickback concerns. And some years ago now, the anti-kickback authorities issued a special advisory bulletin attacking these kinds of contractual joint ventures. The thing does not have the force of law, but what it indicates is that the government is very interested in and concerned about this particular type of joint venture, the lease from the referring physician to the billing entity. The fair market value determination, which people seem to rely on and which is helpful to rely on in Stark, it is useful to know, does not necessarily fix the problem from an anti-kickback perspective. Even if a service is provided at fair market value, if the intent of the parties is to pay a fair market value payment to a referrer in order to induce the referral of business, it's illegal from an anti-kickback point of view. So there isn't a fair market value exception in the anti-kickback law. And that's one of the things that is sort of the Achilles heel of contractual joint ventures, and one of the things that the government in its special advisory bulletin really was zeroing in on. I think the final point, and this really has to do with fair market value as well, is sometimes people want to say to themselves, fair market value should mean that I get a fair market value return on my investment. If I've put 10 into the investment, I ought to get 1 return on investment so that I can get a 10% return. That's going to be a position that will be hard to support if you're trying to defend this with a regulator. If we are looking at this kind of venture, a better position would be to say, I might get a return that's 10%, I might get a loss that's 10%. Those are equal probabilities. I expect this to involve real business risk, and I'm taking on real business risk because it's a real business, not a guaranteed return. Now, I know that there continue to be this kind of lease joint venture in the marketplace, and there are lots of situations where they work, and in fact where they work very well. I think the point that I want to make is that the gauntlet that you have to run is a very difficult one, and you should do it periodically. David's going to talk about some different kinds of joint ventures.
Thanks, Steve. I'm going to focus, bringing it home here, on some of the questions that we get asked all the time, and just do it in a question and answer format. Along that vein, if you wish to ask a question, you can type it in the bottom right corner, and we will take those at the end. And if we run out of time, we will still try to follow up with you afterwards. So, just kind of basic questions. Can 2 clinics in one building share a scanner? So first off, it's always helpful, and I am sometimes guilty of focusing so much on Stark and the anti-kickback rule that you forget. Not all joint ventures involve government patients. And if you don't do Medicare patients, if you're just talking about doing private pay, then it's kind of, no offense, Katie, bar the door. It's, you have to look at state law and see if state law expands Medicare, and in some states it does. New Jersey, Florida, California, there are state laws that are going to go beyond Medicare. But in other locations, do whatever you want. Now, assuming you want to involve Medicare, can 2 clinics in one building share a scanner? Probably. So the first thing, if both clinics are open 35 hours a week, then yes. And where does this 35 hours a week come from? It comes from this weird same building test that Steve alluded to. Now there are a few more conditions. So first, the techs have to be properly supervised. That harkens back to what Katie talked about. If you went and talked to those techs, the tech has to say, my supervisor is Clinic A for this scan and Clinic B for that scan. And you have to make sure that that actually operates. And then each group has to employ the tech, or they can share them. You can have a shared employee. There might be other models that work, but I think we're a fan of having either one, ideally they each employ the tech or some kind of formal leasing agreement between them. Now, a common myth that's out there, people think that, and actually there's for some reason, that you have to have, if you're going to do this, a block lease. And when I say by a block lease, I mean contiguous periods of time. Often what's tossed around is 3 hours. Here's where that comes from. CMS has kind of said you need block leases. If you go to speeches, people say you need block leases. I don't think they're right, all right? Here's why they're saying it. Well, first, the lease exception to Stark says that a person has to have exclusive use of space in order for the lease to meet the exception. And CMS says, in effect, these rules require that the space and equipment be for established blocks of time, to which I say, baloney. We bill in the tenths of an hour. And after I get off this webinar, I'm going to go call a client, and it might be for a 0.1 for 6 minutes. Then I'm going to go call another client for another 6 minutes. That first client has exclusive use of my time for the first 6 minutes, and the second one for the next 6 minutes. I don't need to only work in 3-hour increments for someone to have exclusive use of my time. The bigger issue is, am I trying to multitask, and in fact, someone doesn't have exclusive use. But it can be short periods of time, so the notion that exclusive and 3 hours go together is just baloney, all right? Now, the diagnostic test rules, as Katie said, says you have to supervise it. So can 2 consecutive tests be supervised by different physician groups? Well, I would say yes if there's clear communication. And so the ultimate question here is, does the person doing the test understand what's going on? And so the more parties you involve in this sharing deal, the more complicated it gets, the less likely the tech is going to be able to say, oh yes, Katie's supervising this scan, Steve is supervising this other one, and that bozo David is doing the third. They have to know that in order for this to work. Here's the actual stuff from the Federal Register that CMS stated. So a physician sharing a DHS facility in the same building must control the facility and staffing at the time the designated health service is furnished. To satisfy they must meet all of the requirements of the rule, not merely on paper, but in operation. As a practical matter, this likely necessitates a block lease arrangement for the space and equipment to provide designated health services. We note that common per-use arrangements are unlikely to satisfy the supervision requirements of the in-office ancillary exception and may implicate the anti-kickback statute. So note the may and practical matter. They're not saying you have to have a block. They're saying that if you don't have a block, we're worried it's a sham. So the real test can you meet the real test? That was really circular. Okay. Now, let's say you're in a building and you don't you don't operate 35 hours in a week. Well, things are more complicated. There are 2 different tests that apply. Every time you use them, you lull people into a state of confusion. I got an email a moment ago telling me that I was subscribed to the My Coma list. I don't know what that is exactly, but that's where you go if you try to understand these. But here's the bottom line. If only people you're trying to image are patients that you see at that office, it might work. If you're trying to see patients that are seen at other locations in town, much less likely that one of the other 2 tests work. And if you understand that, that gets you close enough to knowing the main thing. Okay, you got 2 clinics or a clinic and a hospital, and they want to share a scanner, and they're across the street from each other. Well, the hospital and the clinic might be able to pull that off if you put it in the clinic. 2 clinics across the street can't share a scanner if they want to bill Medicare for the scans because of the same building requirement. You got to be in the same building. Is this logical? No, it's Stark. Can a group lease a time on another group's scanner? Yes, but, think back to what we were just talking about for Medicare. If you want to bill Medicare, we're back to the same building test. So if you don't care about Medicare and you're in a state that doesn't have a lot of laws, you're in, even Minnesota is okay with this, or South Dakota or Idaho, you can send your non-Medicare people to a place across the street lease time on that scanner, and you should be good to go if, and this is a big if, your payer allows it. Because in fact, Idaho is a great example. I just looked at a Blue Cross Blue Shield contract in Idaho where Blue Cross Blue Shield won't allow anyone to bill for a scan that they don't perform. And I think that can set up questions. So you've got to monitor your payer contracts to know whether you can do this, but Medicare would allow it. Here's one of my faves. Can you take outside referrals? Almost certainly, yes. Okay, you have to be aware if you're in Florida, and I think there's someone on here who is. Florida, you got to be a little careful. It has a state law that limits, in a physician setting, the number of outside referrals that can be accepted to, I think it's 15%. I look at the law enough, I should remember. Katie's nodding. I'm pretty sure it's 15%. It's weird because most of the laws are designed to prevent self-referral. So why they care about outside referral, I don't know. But Florida, to the best of my knowledge, uniquely does. If you're taking the outside referrals, any financial relationship you have with the outside person has to meet a Stark test. If someone is sending you referrals and they lease space, you need a written lease with them. If you've got any sort of financial relationship, you need to be thinking about Stark. So why does everyone think you can't take outside referrals? Well, because there was guidance that used to be in the manuals that said if an entity receives a substantial share of its revenue from outside referrals, it has to be an independent diagnostic testing facility. But A, that language is now gone, and B, that language said that if an entity received a substantial share of its revenue from outside referrals, so if you're an orthopedic group or a cardiology practice, there is no way a substantial portion of your revenue is coming from outside imaging referrals. Just no way. You might have a substantial portion of your imaging money, but that's not what it said. It said the entity's money. So this was people not being able to read, taking a rule that A is gone, and B, when it was there, didn't say anything, and expanding it to something it never said. Okay, we've got our first question. Can an IDTF lease time to a clinic that is not in one building? And I'm going to assume that means not in the same building. And the short answer, and so this is why this stuff gets so confusing. If it's for non-Medicare patients, yes, you can. If you're trying to do Medicare patients, that clinic isn't going to be able to bill for the scans done in that space because they're not going to meet the same building exception. And another thing I suppose I should have mentioned is it shows you how complicated this gets. Then let's say you're doing MRIs, and let's say they involve contrast. Now you need a physician supervising directly, and so you would need a physician there, and that's another layer of complexity.
And how about the IDF shared space rule?
And then there's the IDTF shared. And see, this is what makes this stuff so hard. We've now, thank you, Steve. We just screwed up. That doesn't work, So thank you, Steve, because actually you couldn't do it at all. And this is why this is hard. I gave the part of this that's on the IDTF shared space rule. It's still hard for me to keep this straight, The imaging stuff is really complicated. Okay, so we'll toss this one up to whoever wants to answer it. In reference to Stark, does it address financial limitations when marketing to referring physicians' offices? Hang on, I want to just read that one again to myself.
I think what someone is saying is if we've got referring physicians and we're trying to engage in marketing, and the marketing has got some benefits because we're taking them to play golf, or we're doing meals with them, or we're giving them pens or prescription pads, does Stark deal with that issue? And yes, it does. If you are providing a designated health service, which all the imaging is going to be as long as it's Medicare, then you have to say to yourself, if I get a referral from somebody, do I have either an ownership relationship, or compensation relationship? And if the marketing that you're doing seems to be a transfer of value from you to the referrer, then somebody might say that's a compensation relationship. So it's a kind of a threshold definitional issue. Do we have a compensation relationship? But clearly, marketing, especially if some money is involved, can be that. Now, there isn't a very specific financial limitation. You'd have to really talk about what it is that you're doing with your marketing.
Yeah, and it might be promoting the physician, as Steve just talked about, or also, like, can you take them to dinner? And that, if it's a gift to the doctor, if it's a financial relationship that goes above, Stark's kind of de minimis per annual limits, then that would also be covered. Yeah, and Katie's saying, and she's right, the anti-kickback statute would also apply. All right. Can you post a physician advanced imaging notice at the time of scheduling, or does it have to be actually physically given to the patient? You got to actually physically give it to the patient. Good question, but you got to hand it to them. By contrast, you have to post your hours of operation if you're in an IDTF. That you don't have to give to them.
Yeah, and I'll just clarify that at the scheduling of the imaging, whereas if you gave them a notice when they registered for a general appointment that didn't have anything to do with the scan, that would not be at the time of the referral, which is what the rule requires.
Yeah, which is all the more reason why the sign on the wall doesn't work. All right, well, I think actually we're right at the end of our hour. Please fill out your evaluations. We're always interested in things that would be a good topic, so feel free to hit us with that. Our next webinar, remember, is on the 10th, and that will be something, something a little unusual for us. It's going to be on immigration. So it might be different people in your organization. You should feel free to tell them, people who might be interested in knowing on how to recruit physicians from foreign lands.
I think just so people know, Deb Schneider, who's going to be working on that and providing that seminar, has spent a huge amount of time helping physicians and hospitals recruit healthcare professionals. So she's kind of an expert, and I think it'll be really interesting.
Yeah, I know. She's worked with literally dozens of my clients on that, and it's rules I don't understand at all. So that should pretty much do it. Thanks much, and have a great day.